Based on the historical data and forecast, Bitcoin shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip to 38.9 suggests a potential oversold scenario. The Bollinger Bands have been widening, indicating increased volatility. Considering the support price of 103,200 and the resistance of 110,200, and the forecast showing an upward trend, I propose a strategy combining RSI and Bollinger Bands. The entry price will be $103,200. The stop loss will be set at $102,500 to protect against a potential downside breakout. The initial target price will be $108,500, aligning with the forecast and the upper Bollinger Band. To maximize returns, I recommend a tiered target approach. After reaching the first target of $108,500, we will move the stop loss to the break-even point of $103,200. If the price continues to rise, the second target will be $108,100, based on the forecast data. If the price breaks through the resistance level of $110,200, the final target will be $108,500. This strategy combines RSI's oversold signals, Bollinger Band's volatility cues, and support/resistance levels to create a dynamic and potentially high-return investment portfolio. The key is to actively manage the stop-loss and target prices as the market evolves. Based on the historical data and forecast, Ethereum has shown considerable volatility, with a recent dip below the support level of $2,400. The RSI consistently remains below 50, indicating a potential downtrend. However, the forecast suggests a potential recovery, with prices fluctuating between $2,350 and $2,470. Considering the Bollinger Bands, the price is currently near the lower band, which might signal a potential bounce. My strategy is to implement a long position when the price reaches $2,350, with a stop-loss set at $2,310 to mitigate potential losses if the downtrend continues. The target price for this trade will be $2,470, aiming to capitalize on a potential rebound. To optimize returns, I'll incorporate a dynamic adjustment based on the RSI. If the price reaches $2,470 and the RSI exceeds 80, I will immediately close the position to avoid potential reversals. Conversely, if the price falls below $2,350 and the RSI drops below 20, I will close the position and consider a short position. This adaptive approach allows for maximizing profits while minimizing risks. The portfolio will be weighted 60% towards the long position strategy, 20% towards the RSI strategy, and 20% towards the Bollinger Band strategy, creating a balanced and robust investment approach. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and slight upward movement. The RSI consistently fluctuates between 35 and 50, indicating neither strong overbought nor oversold conditions. However, the recent dip to 35.2 on June 23 suggests a potential oversold opportunity. Considering the forecast prices, which predict a gradual increase to $2.17, and the Bollinger Bands showing price action within their range, I recommend a moderate long position. The entry price should be $2.09, coinciding with the initial forecast price and near the support level. A stop loss should be placed at $2.02, just below the support level to mitigate risk. The target price should be $2.17, aligning with the forecast and the upper Bollinger Band range. To refine this strategy, we'll incorporate an RSI-based filter. If the RSI falls below 30, it signals a strong oversold condition, triggering an entry at $2.09. Conversely, if the RSI exceeds 70, it indicates an overbought condition, prompting a short position. Given the current RSI around 44, we'll focus on the long side. The stop loss remains at $2.02, and the initial target is $2.17. If the price reaches $2.17, we can consider moving the stop loss to break even and setting a secondary target at $2.23, the center of the Bollinger Bands, to capitalize on further upward momentum. This blended approach leverages both forecast data and technical indicators for a balanced and potentially high-return investment. Based on the historical data and forecast, BNB shows a fluctuating trend with periods of consolidation. The RSI values have been oscillating between oversold, below 33, and overbought, above 49, suggesting a sideways market. Considering the support price of $641 and the resistance of $655, we will implement a combined strategy leveraging RSI and Bollinger Bands. The forecast data indicates a potential dip to $636 followed by a rebound, suggesting a short-term buying opportunity. Our strategy involves a long position with an entry price of $636. We will place a stop-loss order at $633 to limit potential losses. The initial target price will be $647, aligning with the upper Bollinger Band and a potential resistance level. If the price reaches $647, we will move the stop-loss to the break-even point of $636. We will then set a second target price at $655, the resistance level. This combined approach aims to capitalize on short-term price movements while managing risk effectively. Based on the historical data and forecast, Solana shows a downtrend with fluctuating volatility. The RSI consistently remains below 50, indicating a bearish momentum, with values frequently dipping below 35, suggesting oversold conditions. The Bollinger Bands show that the price has been trading near the lower band for a while, further supporting the downtrend. Considering this, I propose a short position strategy. Entry price will be $136. The stop-loss will be set at $141, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price will be $131, aligning with the support level, aiming for a profit of $5. To refine the strategy, I'll incorporate the RSI as a filter. We will enter a short position when the RSI falls below 30, confirming oversold conditions. The initial entry price will be $136, with a stop-loss at $141. If the price reaches the target of $131, we will secure the profit. If the price rebounds and touches $141, we will exit the position. This combined strategy leverages both Bollinger Bands and RSI to maximize profit potential while minimizing risk. Based on the historical data and forecast, TRON shows a sideways trend with support at $0.266 and resistance at $0.271. The RSI fluctuates between 41.1 and 51.4, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the forecast prices, we anticipate a range-bound movement. Therefore, a range trading strategy is recommended. We will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels to maximize returns. The entry price will be $0.269 when the RSI falls below 40 and the price touches the support level of $0.266. The stop-loss will be set at $0.264, below the support level, to limit potential losses. The initial target price will be $0.271, the resistance level. If the price reaches the resistance, we will move the stop-loss to the entry price of $0.269 and set a new target price at $0.274. This dynamic adjustment aims to capture profits while managing risk effectively. This strategy combines the strengths of all three indicators for optimal results. Based on the historical data and forecast, Dogecoin exhibits a downtrend with increasing volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The Bollinger Bands have been widening, suggesting heightened market uncertainty. Given the RSI hovering around the oversold territory, below 30, for a significant portion of the recent period, and the forecast prices remaining relatively stable around 0.154 to 0.159, a contrarian strategy focusing on short-term bounces could be effective. I recommend a strategy that involves entering long positions when the price touches the support level of $0.151, setting a stop-loss at $0.148, and targeting a profit at $0.16. To refine the strategy, I'll integrate the Bollinger Bands. When the price touches the lower band of $0.148, it signals a potential bounce. Enter a long position at $0.151, place a stop loss at $0.148, and aim for a target price of $0.16. This strategy combines the oversold RSI signal with the lower Bollinger Band as confirmation. This approach balances risk and reward, capitalizing on short-term rebounds while mitigating potential losses with a well-defined stop loss. The predicted forecast price of $0.154 to $0.159 further supports the possibility of a temporary upward movement after touching the support level. Based on the historical data and forecast, Cardano exhibits a downtrend with increasing volatility. The RSI consistently remains below 50, often dipping into oversold territory, suggesting a potential for short-term bounces. The Bollinger Bands show a narrowing range recently, which might indicate an approaching breakout. The support price is consistently at $0.542, and the forecast predicts a continued decline, reaching as low as $0.525. Therefore, I recommend a contrarian strategy focused on short-term bounces while maintaining a bearish outlook. My proposed strategy involves entering a long position at $0.536, coinciding with the forecast price on July 1, 2025, when the RSI is oversold. The stop loss should be set at $0.542, just above the support level, to limit potential losses if the price breaks down further. The initial target price is $0.548, aligning with the forecast price on July 2, 2025. If the price reaches this target, consider trailing the stop loss upwards, closer to the current price, and setting a second target at $0.556, the resistance price from the historical data. This approach allows for capitalizing on short-term rebounds while protecting against downside risk and adapting to changing market conditions. Based on the historical data and forecast, Bitcoin Cash demonstrates a clear upward trend. The price has consistently tested and rebounded from the support level of $460, while the resistance level sits at $534. The RSI fluctuates between 55 and 70, indicating periods of both buying and selling pressure but generally staying above the oversold level of 20. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for further price movement. Given the forecast predicting a steady increase to $516 within the next week, I recommend a long position strategy. My strategy involves entering a long position at $486 on June 27, 2025. The stop loss will be set at $472 to protect against a potential pullback, and the initial target price will be $501, aligning with the forecast for July 1, 2025. We will then adjust the target price to $516, based on the forecast for July 3, 2025. This strategy combines the upward trend, RSI readings, and Bollinger Band expansion to maximize potential returns while managing risk effectively. The RSI is currently at 61.1, which is not oversold or overbought, indicating a favorable entry point. Based on the historical data and forecast, Sui shows a downtrend, with the price fluctuating around $2.8 to $3.07. The RSI consistently remains below 50, indicating a weakening momentum. The forecast for the next week predicts a price range between $2.52 and $2.6. Considering the support price of $2.45 and the current RSI levels, I recommend a long position when the RSI reaches $30, with an entry price of $2.52. Place a stop-loss order at $2.37, just below the lower Bollinger Band, to limit potential losses. Set a target price of $2.83, near the recent resistance level, to capture a potential rebound. To refine the strategy, I will incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition. If the forecast price continues to decline and the lower band is tested, consider entering a long position at $2.5. The stop loss should be set at $2.41, slightly below the lower band, and the target price at $2.6, aligning with the forecast high. This combined strategy, leveraging both RSI and Bollinger Bands, aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Aptos shows a clear upward trend, supported by the consistently rising forecast prices from $4.57 to $5.18. The RSI values have been generally low, indicating oversold conditions, with the lowest point at 30.7, suggesting a potential for a rebound. The Bollinger Bands also support this view, as the price has been nearing the lower band for a while, indicating a possible breakout. Therefore, I recommend a long position strategy. We will enter a long position when the price reaches $4.57, placing a stop-loss order at $4.13 to limit potential losses. The initial target price will be $4.94, aligning with the forecast price and the resistance level. To maximize returns, we'll implement a dynamic target price strategy. Once the price reaches $4.94, we'll move the stop-loss to the entry price of $4.57, securing a profit while allowing the position to continue benefiting from any further upward movement. If the price continues to rise, we'll set the next target price at $5.14, then $5.19, capitalizing on the bullish forecast. This adaptive approach combines RSI oversold signals, Bollinger Band breakout potential, and support and resistance levels to create a high-return investment strategy with clearly defined risk management. Based on the historical data and forecast, Conflux demonstrates a downtrend, particularly evident in the recent price action and the forecasted prices hovering around 0.0675 to 0.0699. The RSI consistently remains below 50, often dipping into oversold territory below 30, suggesting the asset is undervalued but also indicating persistent selling pressure. The Bollinger Bands show that the price is currently near the lower band, further reinforcing the bearish sentiment. Therefore, a short selling strategy is recommended, targeting a continuation of the downtrend. The entry price for this short position should be $0.0703. Given the support level at $0.0637, we will set a stop-loss price at $0.073 to protect against a potential reversal. The target price will be $0.0637, aiming to capitalize on the downward trend. We'll implement a layered exit strategy, taking partial profits at $0.069 and $0.065 to manage risk and secure gains. This strategy combines technical indicators and price action to maximize potential returns while minimizing risk, aligning with a high returns investment approach. Based on the historical data and forecast, official Trump shows a downtrend with consistent price declines over the past 2 weeks. The RSI consistently remains below 50, indicating a bearish momentum. The forecast for the next week projects further price drops, reinforcing the downward trend. Considering the support price of $8.73 and the forecast price of $8.26 on July 3, 2025, I recommend a short position. Entry price should be $8.6, with a stop-loss placed at $8.9 to protect against potential reversals. The target price should be $8.26, aiming to capitalize on the anticipated price decline. To refine this strategy, I'll incorporate the Bollinger Bands. The price consistently trades near the lower band, confirming the bearish outlook. We will use an RSI strategy with an oversold level of 20 and an overbought level of 80. Given the RSI of 35.0 on June 26, 2025, we are not yet in the oversold territory. Therefore, the combined strategy involves entering a short position at $8.57, setting a stop-loss at $8.9, and targeting $8.26. This portfolio combines technical indicators and price forecasts for optimal returns. Based on the historical data and forecast, Ether.fi shows a downtrend with increasing volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, dipping into oversold territory multiple times. The Bollinger Bands are widening, suggesting increased price fluctuation. Considering the support price of $0.838 and the forecast prices hovering around $0.89 to $0.96, a short position is warranted. I recommend entering a short position at $0.892 with a stop-loss placed just above the upper Bollinger Band at $0.931. The initial target price should be the immediate support level of $0.838, aiming for a quick profit. To refine the strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI reaches below 30, indicating an oversold condition, consider covering a portion of the short position at $0.861. Conversely, if the price touches the lower Bollinger Band and the RSI is below 40, it could signal a potential bounce. In that case, reduce the position size and move the stop loss to the center of the Bollinger Band at $0.885. The final target price for the entire short position should be $0.774, capitalizing on the overall downtrend. This layered approach allows for adapting to short-term fluctuations while benefiting from the long-term bearish outlook. Based on the historical data and forecast, Virtual's protocol has been in a downtrend, consistently testing the support level of $1.37. The RSI has been fluctuating below 50, indicating weakening momentum, and has recently entered oversold territory with readings below 35. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the price has consistently touched the lower band, confirming the downward pressure. Considering the forecast for the next week, the price is expected to remain near the support level initially, with some fluctuations. Therefore, a contrarian strategy focusing on short-term bounces off the support level is recommended. I suggest a long position entry at $1.35, coinciding with the forecast price and the established support level. Place a stop-loss order at $1.32, slightly below the lower Bollinger Band to account for potential further downside. For the target price, aim for $1.46, aligning with the forecast high and a reasonable short-term profit target. This strategy leverages the oversold RSI and support level to capitalize on potential short-term rebounds while mitigating risk with a well-placed stop-loss. The portfolio should be 60% long position and 40% cash. Based on the historical data and forecast, Artificial Superintelligence Alliance has shown considerable volatility, with periods of both upward and downward trends. The RSI consistently fluctuating around the 40 mark suggests the asset is currently in an oversold condition, potentially signaling a buying opportunity. The forecast for the next week indicates a slight upward trend, with prices ranging from $0.633 to $0.672. Considering the support price of $0.651 and the resistance of $0.719, I recommend a long position with an entry price of $0.633. Place a stop-loss order at $0.61 to mitigate potential losses if the price declines further, and set a target price of $0.672 to capture the anticipated upward movement within the forecast period. To refine this strategy, we will incorporate the Bollinger Bands. The current price is near the lower band, reinforcing the oversold signal. A strategy combining RSI and Bollinger Bands would involve entering a long position when the RSI is below 36 and the price touches the lower Bollinger Band. In this case, we enter at $0.633. The stop-loss should be set just below the lower band at $0.61, and the target price should be set at the mid-band, approximately $0.672. This combined approach provides a more robust and adaptive investment strategy, leveraging both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Pyth network shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment, with dips below 30, suggesting oversold conditions. The Bollinger Bands widening reflects this volatility. The forecast for the next week predicts a continuation of this downward trend, with prices fluctuating around $0.0855 to $0.0822. Considering the support price of $0.0928, a strategy focusing on short-term reversals and capitalizing on oversold bounces appears promising. Therefore, I propose a combined strategy incorporating RSI and Bollinger Bands. We will initiate a long position at $0.0855 when the price touches the lower Bollinger Band and RSI dips below 30. The stop-loss will be set at $0.0822, just below the forecast low, to limit potential losses. The target price will be $0.0928, aligning with the established support level and a reasonable profit margin. This strategy aims to capture short-term upward bounces from oversold conditions while mitigating risk with a tight stop-loss. This portfolio combines the most efficient of the three strategies. Based on the historical data and forecast, Bitcoin Cash demonstrates a clear upward trend. The price has consistently tested and rebounded from the support level of $460, while the resistance level sits at $534. The RSI fluctuates between 55 and 70, indicating periods of both buying and selling pressure but generally staying above the oversold level of 20. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for further price movement. Given the forecast predicting a steady increase to $516 within the next week, I recommend a long position strategy. My strategy involves entering a long position at $486 on June 27, 2025. The stop loss will be set at $472 to protect against a potential pullback, and the initial target price will be $501, aligning with the forecast for July 1, 2025. We will then adjust the target price to $516, based on the forecast for July 3, 2025. This strategy combines the upward trend, RSI readings, and Bollinger Band expansion to maximize potential returns while managing risk effectively. The RSI is currently at 61.1, which is not oversold or overbought, indicating a favorable entry point. Based on the historical data and forecast, movement shows a clear upward trend, particularly evident in the recent price action and the projected increase over the next week. The RSI consistently dipped below 30, indicating an oversold condition, and has now recovered above 50, suggesting a potential shift in momentum. Considering the support level at $0.166 and the resistance at $0.193, along with the Bollinger Bands showing a widening range, I recommend a long position. The entry price should be $0.156, with a stop-loss order placed at $0.134 to mitigate potential losses. The initial target price should be $0.183, aligning with the forecast and the upper Bollinger Band. To maximize potential returns, I suggest a dynamic target price strategy. Once the price reaches $0.183, move the stop-loss to the entry price of $0.156. As the price continues to climb, adjust the stop-loss further to protect profits. If the price reaches the resistance level of $0.193, take partial profits and set a new target price of $0.200, anticipating a potential breakout. This approach combines the momentum indicated by the RSI and Bollinger Bands with the support and resistance levels to create a robust and adaptive investment strategy. Based on the historical data and forecast, DeXe shows a fluctuating trend with a recent bounce from the support level of $8.85. The RSI consistently stays below 50, indicating a bearish sentiment, with dips below 30 suggesting oversold conditions. The Bollinger Bands show volatility, with the price frequently touching the lower band, indicating potential buying opportunities. Considering the forecast for the next week, the price is predicted to fluctuate between $8.15 and $8.43, with an overall slightly upward trend. Therefore, I suggest a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. My recommended strategy involves a tiered approach. Firstly, when the RSI falls below 20, indicating an oversold condition, enter a long position at $8.15. Set a stop-loss at $7.85, just below the recent low and the lower Bollinger Band. A primary target price is $8.97, aiming to reach the recent high. A secondary target price is $9.12, which is the resistance level. If the RSI rises above 80, indicating an overbought condition, enter a short position at $8.43. Set a stop-loss at $8.85, just above the support level. A target price is $8.15. This combined approach allows for capturing both upward and downward price movements, maximizing potential returns while managing risk.